Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 2nd of March. Trump and Clinton win on Super Tuesday. Donald Trump and Hillary Clinton won 7 states each on Super Tuesday and advanced their claims on their party's nominations. While the Republican race seems to have a clear frontrunner at the moment, the Democratic results were much closer, with Bernie Sanders securing 4 states and challenging Clinton's nomination. Given the notable rise of unconventional politicians in the presidential race, we would expect this uncertainty to feed slowly into the markets, as the relative current US political stability could come under question. We believe that the risks are arguably not priced in yet, and as we head into the elections day, this uncertainty could weigh on the greenback's strength. Now, overnight, Australia's GDP for the 4th quarter slowed, but beat expectations of a larger decline in the growth rate. Fiscal spending and consumer expenditure helped to offset the drag from mining investment and export revenues. It looks that the economy managed to grow at a reasonable rate despite the slowdown in its main trading partner, China. On Tuesday, the RBA signaled that it will continue to monitor incoming data to determine if further easing is required. So, as a result, Aussie dollar jumped on the encouraging data, as investors may have pushed back expectations for further RBA easing in the near term. We share this view, and we believe that this reduces the likelihood for the bank to act anytime soon. Coming on top of an elevated risk sentiment, high-yield currencies could continue to strengthen in the short run. As such, Aussie may remain supported in the foreseeable future. Elsewhere, Asian stock markets closed in the green on Wednesday, with both Japan's Nikkei and China's Shanghai Composite Index up approximately 4%. Better than expected data from Australia and the US, as well as China's recent reduction of bank's reserve requirement ratio, seem to have helped to ease fears of a severe global slowdown, at least temporarily. It is possible that this boost in sentiment rolls over into the European trading session as well and lessen somewhat the demand for safe haven assets. As for today's events, the UK construction PMI for February is expected to have increased to 55.5 from 55 in January. However, given that the manufacturing PMI disappointed on Tuesday and that the services PMI is expected to decline as well, we see high downside risk to the construction forecast. Weak data from these sectors are likely to amplify concerns that the British economy may have started losing momentum in the 1st quarter and could add further selling pressure in the pound. Eurozone's PPI for January is expected to show that producer prices continue to fall, albeit at a marginally slower pace than in December. Nevertheless, since the bloc's preliminary CPI already showed that consumer prices fell in February, the PPI for the previous month may have a limited impact on euro, if any. From the US, we get the ADP employment report for February, 2 days ahead of the non-farm payrolls. The ADP figure is expected to show that the private sector gained 190,000 jobs, less than it did in the previous month, where the print hit 205,000. Despite the decline, this is still quite close to the 200,000 point and could confirm that the labor market remains the bright spot in the Fed's chart book. Although an unreliable predictor of the NFP figure, a solid ADP report could increase the likelihood that the NFP print due out on Friday may also come near the 200,000 mark. Non-farm payrolls are currently expected at 190,000 as well. Besides the ADP report, the Fed will release the Beige Book, which includes a summary and analysis of current economic conditions in each district and sector. This will provide qualitative information to Fed officials on how the US economy performed during the recent financial volatility that devastated global equity markets. We have 2 ECB members and 1 Fed president speaking today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.